Thank you. Thank you, Sarah. All right, so I'm going to exit and let's see. So Drake 22, it's an S corporation rental property example. We went through, we didn't really cover this in the real estate course that I had live earlier in the year, but I'm going to go over how to correctly enter rental property and how to sell rental property towards the end of it. An S corporation that has rental property, you do not put anything in the income tab. You can see we have nothing there. Nothing goes on the deductions tab. There's actually a special form for this. If you'll find it under the other forms tab. Oh, first, let me go back because some of you didn't see, when you do an S-Corp return, then you view it and it comes out, well, Georgia's got an error message and it's the phone number. So on the name and address screen, you can click state info right here, enter the phone number here, and it should carry forward to next year too. So you only have to do it one time. I hope. I used to just click over to the Georgia screen general tab and enter the phone number there, but it doesn't update that every year. And it's really a pain to me. So I've got this return. It's got one rental property in it, and I've already done the return just to speed things up because this is not going to be a long webinar. I just want to show you where to enter the rental real estate info to get a correctly prepared S corporation return that has rental real estate. So you can see it's this 8825. It's on the other forms tab. Click here, you can add a new form. It's got one line to add everything, but I prefer to go to item detail and get the info entered from this screen. So type of property, and I hope everyone can see my screen okay. I hope it's large enough. Let me know if it needs to be a little larger. I'll see what I can do. So hopefully you can see it. All right, so I clicked in single family. So what that is, that means it's not a condo, it's a house. It's a residential house. Enter the address, city, state, zip. Fair rental days, you need to enter that as 365. If they did not use it any for personal uses, you could put a 0 there under personal use days. And this is a little more streamlined than a 1040 with a rental property because, you don't have to click over to get to the income. It's here for you on the one screen. So you put your income and all of your deductions, advertising, auto and travel, and other. I think I've got everything listed here so you can see that. The other question you need to answer is the qualified business income. I've got it checked yes. Okay, let's see if we hit shift question mark what the options are. So clicking yes indicates that it is a trade or business. However, I need to warn you that per IRS publication 535, W-2 wage, qualified trades and business include Section 162 trades or business except for trade or business conducted through a C-Corp. Now, here's what I want to warn you about. The ownership and rental of real property does not, as a matter of law, constitute a trade or business, and the issue is ultimately one of fact in which the scope of the taxpayer's activities in connection with the property must be so extensive as to give rise to the stature of a trade or business. However, the rental or licensing of property to a commonly controlled trade or business is considered a trade or business under Section 199A. So what this means, if you want to get the QBI deduction for this rental property, you have to click yes, but the owner has to participate in it to qualify it as a trade or business, and that's for another class. That's not for this class. I'm going to guess that most of your 1040s with a rental property shouldn't click yes here. You need to, if you've got one coming up, go ahead and do the research on what it takes to include it in QBI. So there it is. That's all it is. We're going to take a look at, we're going to view and print, and click over to sets. I use the enhanced view on this. We'll make this larger for you. The 1120, there are no entries on page 1. It all goes over to, where is it? 8825. This is the 8825 that's produced. You can actually get 4 properties on one form, so it works out well. I don't know what you guys charge for rental properties, but for each one, you should be at least, $100 to $300, depending on the complexity of it. Once you've got them keyed in the first time, they're pretty easy to use. So here you can see the property name, the gross rent, deductions, the net income, and income versus expenses gives you the profit. Okay. I want to go back and show you the depreciation on this because it's very important. And I think a lot of you are getting this wrong, except those of you who took our live real estate class and my EAs, you probably might be doing a little better on this. But to enter any depreciation, you can see that I have a cabin, and I'm going to double click to get the item detail. I don't know if I hope you can see this. I've got to figure out how to make my screen zoom for you to make it a little larger, kind of like Drake does. So you have to click on this first box in form 8825 for your depreciation to go to that form. And that's where it goes on this return, because it is an S-Corp with only rental property. Date acquired 1/1/22, cost $140,000. And this box, many of you probably are not keying this in, but it's 1250 property, which is depreciable real property. Section 1245 is depreciable other property like equipment. So 50 goes in this box. And since it is a single family residence, it's going to be what? It's going to be 27.5-year real property, which is, you just, from the drop-down box, just select this and then type in, I'm sorry, 28.5. Let's see, what is it? 27.5. I've got this wrong. So it'd be 27.5 years depreciation. That's all you have to do. Okay, so that is the building portion of it. The total price of this property was $189,000 because we have the lot separated. Why do we separate the lot? Well, it's because the lot is land and you do not depreciate land. So you have to separate the land from the building to prepare a correct return. Again, you have to put 8825 in the for box. Multi-form code, I put a 1 there. Don't have to because it is the only one. If you have multiple properties, you would select which property you want this lot to go to. So my description is lot, the same date of purchase, the cost, and it is section 1250 property. And I selected NDA for non-depreciable asset. So what this is going to do, it's going to track the total cost of this property. And let's say you add a new refrigerator to it. In fact, we can go ahead and do that if you want to. I'm going to hit page down to add another asset. And it's going to also go to the 8825. And I'm going to put a 1 here, refrigerator here. And 01, let's just do 06/01/2022, cost $899. And what property type is that going to be? That's going to be section 1245 property. And If you don't know, most of this is going to be MACRS right here. MACRS. So an M goes here. Now, what is the life of a refrigerator? Well, if you don't know that, hit Shift question mark, and this great box pops up, and it gives you description: 3-year property, race horses. Wow, how do you? I guess they don't live too long, or they don't race very long. All right, 5-year property is what I'm thinking. Office machinery, research and appliances. There it is. So it's 5-year property. So easy to find. So we put a 5 here. And right now we have a thing called bonus depreciation, which is like Section 179. So you don't have to do any Section 179. It's always better to take the bonus because there are limitations on how much you can take for Section 179. Most of our clients don't fall into that limitation, but it's better just go ahead and let the system take the bonus depreciation. So we've got 3 assets now on this one property, multifunction 111, same property. The system will aggregate all of these costs to that property. So we can hit escape and let's view the depreciation on it. First, let's take a look at the 8825, and we can see depreciation on line 14, 5778, which is going to be only the cabin, the building or the structure, and the refrigerator. Okay, and we can see that. I clicked out too far. Let's see, the 4562. Let's just look at the depreciation, federal depreciation. There's your cabin, your lot, and your refrigerator. Basis adjustment on the lot. It's not depreciated, so, but it's tracking the cost for you. It's very good for you. Makes your life much simpler. Okay, so you can see bonus depreciation taken on the refrigerator. It deducted the entire amount, which is what we want it to do. Okay, and we look at the K1, which is what's reported to your client on their personal tax return. All of this flows to your client's personal tax return. So we look at the K1 for the owner of this company. One owner, 100%. It's not listed in ordinary business income. It's listed under net rental real estate income or loss. We've got a distribution here of 20,000 that they took. I'm going to show you how I entered that. As corporation owners take distributions, they take their money, their profits out 2 ways: salary and distributions. We typically advise clients to pay a typical or normal salary for somebody in whatever industry they're in. So to key in the distributions, you click on this DIST screen, distributions, and I typically will use 1231, the year end for the tax return that I'm preparing, and put the total distributions there for the year. Now, what that does, that reduces their basis in the company, in the profits. Basis is very important because if they have a loss, they have to have some basis. Another thing I want to point out to you is on this K1 screen, Schedule K, you always have to go here. You might as well get into the habit of it for now and click on credits. And down here at the bottom, you're going to see Schedule K and K3 are not required. Let me show you what happens when you don't check that box. I go to view this return, and we can see that, let's see, messages. Here we go. All right, so we're missing a couple of things besides my EFIN. I don't transmit from this computer. I only use it for demonstrations. Filing security information, you got to key in some prior year, even if it's 0. If you plug 0 in there, it's going to take this screen away. 1 second, please. Okay, I'm back. So you've got that. And the other thing that comes up is this note right here. Schedules K2 and K3 filing requirements. Now, this primarily deals with companies that have foreign income. So what we do is we go to the data entry and hit the second tab, SBS K, K1, K2, K3. Click on shareholders, pro rata share items. Then click on credits. And down here at the bottom, line 14A, check the box that those forms are not required. That's going to get rid of that message for you. There's another message that's typically reported. Let's see what that is. Oh yeah, we went over that. It's the financial information. And this is to prevent fake returns from being filed. So down here at the bottom, filing security information. Since this is the first year that this company is filing a return, we put in total prior year income amount, we're going to put 0. That will clear that message. And it should give you greens if everything else is good. That will get rid of those 2 messages. So you can see they're gone. Just I'm invalid. No, I don't have my prepare or peach dinner firm set up. I need to do that. So we get greens on these things. Okay, so we've got another item is the balance sheet. The balance sheet is you're required to fill the Schedule L out if the company has 250,000 in assets or 250,000 in gross sales for the year. Luckily, this client does not have any of that. But if they do, then you will have to prepare the schedule. And Schedule B is a schedule you need to enter, answer all of the questions correctly. I will spend some time later and go through this with you. It's very important to make sure you answer all of these questions because it's required. All right, let's take a look now at selling that rental property. A lot of y'all trying to make this difficult, and it's easy. Carolina could teach this now because I've been through this I don't know how many times with her, as she saw it at the live class. So very simple to sell this rental property. So we go back over to the depreciation screen to do that, okay? So click on depreciation, and I'm going to click on to the cabin, which is the structure on the property. We're going to sell this on the last day of the year. So where you sell this is over here on the bottom right. And since this property has more than one asset associated with it, it's got the cabin, which is the structure, it's got the land, and it's got a refrigerator associated with this. So we're going to group those together, and the software handles this beautifully down here a little further at the bottom. So I'm going to put the date sold on the first line, 12/31/2022. And then I'm going to drop down to the group sale number, and I'm going to put a 1. So that is our group sale number. The software will group everything with a group 1 into one sale. A sale is not going to go on your capital gain screen. A business asset. This is a business asset. So it's going to go on a 4797. And I'll show you that in just a minute. The group sales price, let's sell it for $225. So we put the total there, and let's say commissions and other expenses to sell it were $30,000. So I'm going to put expensive sale there. Let's see. What else? Group sales price, expensive sale. That's all we need. Now I want you to notice that you have an installment sale and you have like kind. We're not going to go through that. but those are items that you might need in the future. So just understand that those options are there. So we've sold it for 225. Expensive sale is 30. So I'm going to hit escape. I could have hit page down and gone to the lot. That's the next asset. So I'm just going to go here to group sale number and put a 1. Pretty easy. Don't need to put any other info in because it's already keyed in on the cabin, the structure. I hit escape and I'm going to go to the refrigerator and I'm going to put a 1 there. So that's all of the assets. That's all you have to do to sell this rental property, and it's in depreciation. You don't go to a 4797 directly. You don't go to capital gain, where you would sell stock or something like that. It's done on the depreciation screen, and it's so simple. I hope you'll start using this. I know some of you have already. So I'm going to hit escape and we'll view this. And so we sold that rental property. That is going to generate, let me move this bar out of the way. That is going to generate a 4797 sale of business property. And that's where this goes. Now, the line number that each item shows up on depends on the property type. If you'll remember that the structure and the land is type 50 property, section 1250 property, and everything else like the refrigerator, other appliances, lawnmowers, whatever you have for that rental property is section 1245. So you can see that we have the cabin, the lot, and the refrigerator. Now, what the system has done, it has allocated the sales price less the expensive sale to each of these items based on their purchase price or the price allocated to them from the total. So I think we had like 189 plus the refrigerator. So it allocated the sales price to each one of these. And this is the cost right here and the gain on the sale. So it's not very much. Let's go look at the K1. And we can see that the rental income, I don't think it took any depreciation because the asset was sold in the same year. Let's take a look at that quickly. Depreciation, it's got the basis. No, it didn't take any depreciation because it was sold. So when it's sold the same year, it's not going to take any depreciation. K1, let's go back there. Net rental income is 35,000. That's going to be reported on the client's tax return, personal return. More information on the rental, on the sale. And let's see, distributions from the K1, they distributed 20,000 to the owner. QBI, it's going to give them some QBI because I selected yes, that it is a business property. Supplemental info, nothing there. So what do you do next? You click on K1 export here at the top. Once you've got this return done and it's checked out and you're happy with it, you go to K1 export. And if the owner is in the system, it's going to find it. And then you click next and it will export all the data automatically to the client's return. So I am nearing the end of my presentation on how to file a rental property on a 1120S. If you have any questions, I'm happy to answer them. If you're able to unmute yourself, you can go ahead and unmute yourself and ask the questions, or you can type it in the box and I'll hang around for a few minutes. I appreciate you guys showing up. We're going to try to do more Zoom meetings between now and tax season. It's hard to believe tax season is just a few months away, but we're preparing for it. I hope you are too. It's always good to catch paper on sale somewhere, like Office Depot. I think they're having a sale right now, $46 a case. And Costco, Sam's Club. Um, okay, we have a question that how did I come up with the cost of the land? Um, I don't know. I guess I've lived in Atlanta so long, I kind of know how much land goes in each area. But I will always ask the client when they buy a new property, how much land is came with that property? And they'll say, oh, half an acre. Where is it located? Gwinnett County. And if they paid like 600 for the property, half an acre, you can either call a real estate agent that and ask them what land is going for. You can look that property up on you can look up lots in that area, see what lots are going for. Those are the best ways. The owner may know what the lot is worth. That's always the first place I go to. I ask the owner, well, how much is the land worth that it's sitting on? And if they don't know it, then I'll figure it out myself. It's not something that I spend a lot of time on, um, because your opinion is just as valid as someone else's. If you do a little checking on it, like get on Zillow or realtor.com, look at lots in the area, see what they're going for. Any other questions? Okay, if you have any other questions, feel free to message me or text me or call me. I'll be happy to answer it. Thanks for coming today. We'll try to get in some more classes here real soon. Call me if you have any trouble with any of your corporations, because they're coming up due. The S-Corps are coming up due. Partnerships. I don't like partnerships. Don't call me. Just kidding. You guys have a great rest of the week, and I'll see you soon. You're welcome. Thanks, guys.